Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. We're ready. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shorr, Director of Trading Education at Prosper Trading Academy. Thank you both for being with us. So I was just taking a look at Etsy, which is one of your trades today. It's amazing, a huge move lower of late after a nice run up. Tell me a little bit about why, Mike, this one is on your radar.
Yeah, it's come down a lot. Actually, I think it's off a little bit now. But I really like the stock. Not exactly sure why it's coming off the way that it is. It seems like that would be a nice stay-at-home type of thing. But if we can hold this 100-day moving average, I'm not saying that Etsy's going to turn around and go rocketing up, but I think it might be done to the downside for the short term.
Okay, yeah, because that sell-off was definitely somewhat significant off that top. Ben Lichtenstein, some charts here with us. 218 is where it is today. We see it down over $7. Your thoughts on Etsy?
Well, that daily chart shows why I think this could be a key area for Etsy, but I'd have to push back a little bit in terms of what Mike said. I just don't see any real indication yet that the weakness that's been coming into play has really started to slow any. Let's start with the 5-minute time frame, and then we can get into the daily, and I'll show you exactly what I'm talking about in terms of the bigger picture. But first and foremost, Etsy, the move lower from 248 down to 217. You can see over the last few days since those from the highs from last week how, again, we've just been on a slide, migration of value to the downside, no rejection of these lower levels as of yet. A step back from the 5-minute time frame shows that, well, again, just pointing out that this is part of a bigger slide. Here's the move lower that we just talked about over the last few days. This is part of a move off 308, again, all the way down to that 217 level. And the 60-minute, again, shows, well, here you can see how this gets us back to levels we haven't seen since we're talking the middle of October. Now, the bulls want this decline here to end, and they could be at a key area. We oftentimes hear about how prior areas of resistance become current levels of support. So it's going to be key to watch this around this 240 level. But I do want to point out here, this was a short-lived breakout out of the range that we had been in here. This was, well, back to December of last year, all the way throughout looked like October, November of this year. So this is not what the bulls wanted to see. We oftentimes talk about breakouts and how we want to see areas of value forming at higher and higher levels once you get that. This is a bit of a failed attempt to do so, breakout that is to the upside. But yeah, I think the bulls should be looking for this key area. 230, 240 is the area I'd be watching. But again, as of yet, hasn't really slowed in terms of momentum off that 308 level.
It's interesting because you mentioned, right, the short-lived breakout, but it did break out, and then it tried to give it a go even recently, but just couldn't get that momentum to the upside. It's down about 20% for this month of December. But Mike, you're saying this one's on your radar. You're ready to play some odds here. Tell us your trade.
Yeah, so I wouldn't classify myself as bullish. What I am is not bearish, or not extremely bearish. So I'm playing this with a credit put spread. Selling that 220, what were the strikes again? 220.22 half. Selling that for $1.10. So I'm laying odds here, obviously, with the credit spread. So I'm risking 140, taking in that 110. So like I said, I am not expecting Etsy to just go flying up from here. So I'm more of the carnage is over type of camp here.
Right, and December 23. So you don't have to be ever patient too, right, Mike?
Right. I have 2 weeks for this thing. Theta's going to be on our side. It's a play, and it's one of these things. It's always darkest before the dawn. The thing is, if it goes south on us, we do have our risk covered, and I'm more than comfortable with this reward to risk.
Okay. So you've heard what Mike has to say, Ben.
Well, I just think, again, if we can get a bounce from these levels, a key support area, well, an area that could turn out to be key in terms of support, that would be really good for the bulls at this point. That's what they want to see. Other than that, if the slide continues, unfortunately, it opens up the door for a retest of that lower level, like 180, the 160 area. We talk about these ranges, these areas that form here. And again, a failed breakout to the upside. We talk about how that just sort of widens the range that was established. provides us with a new upper extreme, but after doing so, we start to work our way through the middle of this balance area. If this continues here, again, I'd be looking for 159, 160, the next key area to look for, but the bulls want to see the selling subside some and ease some in terms of the momentum to the downside. Again, Mike, I completely agree with him in terms of it's always darkest before the dawn, but still no indication that that selling has ended.
Okay, so let's get to Zillow at this point. We've seen a red-hot housing market. Zillow ran into some problems where they picked up so many homes but had to sell them even at a loss in some cases because it just didn't work out and they had to dump out to a certain extent. So there's certainly been a lot of volatility. It's just above the recent lows. Mike, what is it that you're thinking about when it comes to Zillow?
Yeah, so this red hot market that you're talking about, they couldn't make money doing it. So, and then if we have any sort of hiccup in this, someone classified as a bubble type of real estate market, well, that's not going to be great for them either. So this is one where I am bearish on it. So for these levels and lower, I mean, there's a lot of room down below. I know it's been hit too, but I'll jump on that train now.
Yeah, well, it's not far off that recent low, 52, 57. I mean, it's at 59 now, but with a down arrow even today. Ben?
Well, it has been under pressure, and another one that really has yet to relent, has yet to show any indication that the selling is ending, and no migration of value to the upside at this point. Let's begin with the 5-minute time or the 30-minute time frame, so you can see the weakness, the selling that's come into play, and how we are holding lower levels here. We talk about acceptance, rejection of big moves. In this case, in terms of ticker symbol Z, as you can see, it has been acceptance of this lower level. We got all the way down to 52.57. Now, the selling started into and in reaction to earnings, in addition to the news, as Mike mentioned, and you guys were talking about some of the fundamentals which are weighing on price, and ultimately, it just has yet to recover. This is the 30-minute time frame. A step back to the hourly shows that, well, it actually, again, I want to just point out how it did start into earnings, but look at this slide here, the big move down from 105 all the way down to, well, they lost 50% in terms of their stock price here, just in that move alone here from 105 down to 52.57. Here you can see again that, well, in terms of the hourly time frame, just the run up into that 105 level and how it was short-lived. I wanted to get into the daily time frame in Zillow, though, because this shows us how we're back to levels that we haven't seen, well, since June of 2020, the summer of 2020, and also, again, just part of this bigger move that we've seen here off the 208 level. So it really just shows the decline that we've seen, the slide that they've been on, and another stock company that's been under pressure in terms of stock price and really has yet to indicate that that is eased or slowed at this point.
Yeah, and what are your thoughts here, Mike, as you're hearing what Ben has to say in doing these charts?
Yeah, I mean, I totally agree. That's why I'm going to play the downside with this one. Not super aggressively, but I do like the downside. Not necessarily to go blowing through those recent lows, but towards them.
Yeah, and it's not able to hold the levels, and that's what's so key. Tell us more about your put calendar trade here.
Yeah, I want to do a put calendar here. I'll give myself a little bit of time. So for the long back month option, I'll use regular Jan, and then I'll do the December 31st against it, the 55 put. So again, the ideal place for that to go is to 55 by that expiration. But I looked at it not holding this to expiration. Everything holds in place. You're going to have this thing probably, if we trend towards 57-ish, it's going to be trading about 185 the way that I have it modeled out. It only gets better from there down to 55. Then you got to probably scramble a little bit to get that in if we start breaking below there.
Yeah, what do you think of that, Ben, as you listen to that?
Well, you know, I look at the weekly time frame when I want to zoom out a bit, and when in doubt, zoom out, they always say. And if you take a look at the longer term, you're going to notice an extreme V-top type pattern. Now, in terms of Etsy, remember we were talking about prior areas of resistance providing a new area of support. Well, this is basically what what Zillow did is they broke out again up and through this $58, $60, $70 level, and it was off to the races. when you look at this chart again, you kind of think, well, is that sustainable? It's very difficult to, and in this case, they were unable to do so. That big move lower that we talked about in terms of that 60-minute time frame, the 30 that we looked at into and out of earnings. Well, this was this weekly candle right here, but just want to point out this V-top type pattern again, back to levels we haven't seen since June. So this is the area in terms of Zillow, which is, well, almost identical to what we talked about as far as Etsy, where the bulls want to see provides a little bit of support at this level, but again, still kind of limited in terms of indication that it has as of yet.
Right. Okay, let's get to our last trade here. And this is all about Salesforce, which, Mike, you think is poised for a move higher. Unlike the others, right, where we saw that sell-off and still breaking down, this one is really giving it a go on the comeback trail. Mike?
Yeah, I always love the stock. These are, when we see weakness in the market, which I wouldn't exactly call this weak, but I guess weaker than it was, then you get out what's called your wish list. All the stocks that you're like, wow, I wish I had bought that. Well, now you start to look for those type of stocks. CRM is definitely one of those on my list. So we're starting to see a place where we can actually rationalize an entry for some value as opposed to trying to buy new tops and hoping it goes higher.
And we see it at 266 today. Ben?
Mike and I are not on the same page today, Nicole. Let's start with the 30-minute time frame. Another situation where, again, weakness really is yet to relent. You can see some of the selling that came into play, and in this instance, we're talking about a big move down from 300 all the way to 250. So again, not an insignificant move, and you can also see a situation where we have yet to reject these lower levels. So acceptance of this move lower here. First and foremost, the 30, and again, as mentioned. Now, the one thing I want to point out is if you kind of just zoom out on this chart and just sort of look at it, from a fat crayon kind of perspective, you'll see a big high conviction move to the downside, and then that sideways consolidation. This is a form, again, of acceptance of the lower levels. We just sort of chop and rotate between, well, we'll call it 275 to 250. But also, Nicole, Mike, look at how we see that repeat itself a couple times over and over on a more granular basis. We see it break lower, solid conviction move lower, and then that sideways consolidation that plays out again here into the earnings numbers, and eventually, again, we just start to kind of lose some of that high energy to the downside. But as we move away from that hourly time frame, and this is the move we just looked at from, well, we'll call it 300 down, but that's part of the bigger picture move that's been coming into play from 311.75, where we topped out again. That was back in the middle of November, and then here you can see on the daily time frame, remember we were talking about prior resistance becoming current support. Well, this is an instance where they were able to work their way through, it looks like. And so remember with Etsy, I was talking about how if the selling continues, this is key. Again, a pretty similar pattern here that's playing out in these three stocks. But right now, again, if 260 gives way, you open up a door for a retest of the 200 level. You can see that consolidation that they formed basically throughout, well, all of this year. Again, I just think that this is one that, you're looking at some big selling as of recent, especially, significant selling, again, from 311 down to 250. So earnings kind of took it off track a little bit, but this will be key to see if they can hold the middle of this range, 250, 260.
Right. And Mike, I know you're watching that. I mean, in fact, you said you're clearly watching the 100-day moving average. And while you're willing to be aggressive, you're, in the conservative mindset, you are watching some of the key technical indicators. So what is your trade here?
So again, I'm going to go out to the end of this year, D31. So I'm going to go the 265, 275, 280 broken wing call fly. You can buy that for like 275. So if that maxes out at that middle strike at 75, then you're looking at, I believe, 2.64 to 1 on that thing. If you want to be a little bit more conservative, I said you can wait until we get, if we never get there, don't get in. You can get up into that a little bit higher. Probably want to target a little bit higher on your strikes if you're going to do that, or work with your time frame on that one too. But I'm willing to take it here.
I understand. Mike Shorr, Prosper Trading Academy, Ben Lichtenstein. Thank you both very, very much for the big three today. An exciting move there. We're good to see all three of them. Thank you.
Thank you.
Coming up next, we will